morning, everybody. It's Thursday, February 22nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll get to those during the show. Overnight markets were pretty quiet here. March corn up 3/4, 4.11 3/4. March soybeans down 2.5, 11.58 1/4. And March Chicago wheat up 6 1/4 at 5.89 1/2. Export sales are delayed a day this week due to Monday's holiday, so we'll have those out tomorrow morning. We did have a announcement from the USDA here. 126,000 sorghum were sold to China for 23. With that, we've also got 14. We're through 14 of 20 crop insurance settlements for our spring price here. Corn is currently at 468 3/4, and beans are 1164 1/4, with six settlements there to go. So, good morning, guys. Nothing really in the way of overly fresh news. I think we're still talking about a pretty sizable in the money put position for March corn. And you guys talked quite a bit about that yesterday, and just the interesting makeup of the market. I guess one thing to talk about here this morning is just wheat gaining on kind of the other two complexes. And it's, by all estimations, after trading lower yesterday, had a pretty good close. So anybody care to chime in on our favorite commodity?
Yeah, I'll start, I guess. Wheat beans have had an inverse correlation here for a while. We saw that with managed money positions. There's been a very, very good inverse correlation, though, that is sometimes inexplicable of why that's happening. But it just kind of is a reminder to us that's like sometimes when you try to explain what's happening for any specific commodity and it's related to a completely different thing that's happening or a related pair in a pair trade, that's it's kind of frustrating a little bit, to be honest, because there might be something that directly is contradictory to that in a news event, but money flow trumps all, right? And when we're trying to explain one of the largest counter-seasonal sell-offs, just a nasty sell-off for commodities, it is fair to say that the funds clearly have an impact on it. That they've sold billions of bushels in the last 2 months, that they are very much a part of this move. And there's what's driven, new fresh flows likely yesterday in the March corn contract as well. So paying attention to fund flows and knowing that there's a lot of longevity to their short position when there's a decent carry in the market. Like March to July right now, for example, is about 24 cents carry. If you're constantly coming from the short side of that and you're buying the contract that's 24 cents cheaper and selling the contract that's 24 cents more expensive, you're looking at a chart of a sideways market over the course of a couple of years, like what wheat had, you're still seeing that picked up in the roll from a paper short position, even though they're not physically carrying those bushels. So I've seen a lot of this on social media recently. Just wait for the funds to get out of corn. I agree. If they do have to get out, it could be a very aggressive blow up like we saw in 2019, where it's difficult for them to get out of such a very large position. But the important part there is that we still probably need to see some sort of a catalyst for them to get out. If South America has a problem with safrinha corn, that's probably our next best bet to see that. Mm-hmm. If energies are starting to get into a bull market and we start to see crude back in the 80s, maybe higher, that would be another catalyst to watch. The dollar index as well. We have an election year. A lot of things could happen, but I just want to note that just because the funds are short, that doesn't automatically mean that we're going to see a rally. It's just the setup is there for maybe a more volatile one if there is a catalyst.
Well, I'd comment on that as well, Dustin, to your point in corn, right? And we talked about this in the past. On the longevity of the funds to stay short, a commodity like corn or wheat, when you get that benefit of the roll where they can almost catch the carry if nothing changes, right? You catch a big carry and you're essentially selling at a higher price every contract month. I think corn, obviously, we're still seeing that, the widening of spreads right into first notice day. But wheat, right? I mean, when the December contract went off, funds that were short were able to roll into the March at almost a 30-cent carry, right? And so we're looking at this March-May contract now going inverted right during kind of that roll period where that narrative is gone, right? That benefit's gone. And so I think that just that structure right there, that setup going into the roll period is shaking out some of these shorts, right? It just doesn't make sense anymore for them to be short this contract, whether it's fundamentally bullish or not. Good signs for wheat, I would say. If I was looking for some better wheat prices, the way it's acting right now, just some good signs, and we'll see on this roll period in corn. We'll see how the March-May roll looks over here over the next week or so. But yeah, no, that's just one thing you got to pay attention to. So
yeah, that's a good point.
I think it's interesting. You guys touched on it pretty in depth yesterday, but I was just looking at stuff this morning, and it's, with, tomorrow being option expiration, and to see that large open interest with the average put price at 450. I mean, I can't remember a time. It's been a while since you've seen that many people potentially get paid on that type of a size trade. I mean, can you guys?
Yeah, well, you never really know like who the participants are that are holding long or short. So yesterday's, closing open interest report, I put that in our nightly letter there. Today's opening open interest report, we've got 95,000 puts in the money at this point in time for March, which is still a significant number, especially when you compare to only 583 in the money call options. Wow. And average strike, like you said, right around 450. It's 449 right now. Total open interest for corn is only about 3 times that. So if retail or any position holder, I guess at this point is more likely to be retail than not, in my opinion. So a position holder would be someone that's not neutral to that. They're actually wanting the exposure of being long or short. More often than not, we expect them to be on the long side of the options. Okay, so if they're holding a long in the money put option, that's basically turned into a delta of basically 100% as a short futures. So if your average strike is 449 and that's the delta, you're looking at 95,000 basically short futures that need to either take a short future or roll out of it here by Friday, or going through Friday. You're going to be assigned a futures contract. It'll be very interesting to see how open interest changes on Monday following that, in my opinion. And there could be a situation where maybe there's a way more retail short puts than we expect too, just because the story has not been, a lot of people are confident that the market should keep going down, given how steady and how fast it's broken. There might be an abnormally large short put hold held from retail as well too. And it's more of a neutral response. I mean, that's flat price and spreads have not suggested that it's acting like what you would traditionally expect a deep in the money put to respond going into option expiration. So it's never very clear anyway, but this time seems especially weird given yesterday's market action. So I'd be anxious to see what Friday does, I guess.
Yeah, definitely. I was looking at some weather. We started the week talking about, kind of a longer term potential drier pattern for South America. Looking this morning, Mato Grosso do Sul specifically appears to be continuing to be a little bit drier out into like the 10 to 14 day type of outlook. So obviously, you mentioned, Dustin, too, just some things that outside of this, first notice day, option expiration, a catalyst for some of this support potentially in corn, could come in that form as well. So,
yeah, our weather service is calling for that for the 30-day period for central Brazil. And Yeah, we really kind of need something like that, right? Like the market is just in shambles right now for profitability for 24. Most people haven't sold much at all for 24. I think some of the surveys suggest less than 4% has been sold so far across all producers. We also we know that 23 has been historically undersold, but we're coming into that JFM timeframe where I think a lot of that's getting cleaned up and a lot of things are being sold right now, hence the weakness. We get to that point where, what's on the horizon for global supply and demand balance. It's not like we're going to be out of balance from a supply side just because prices have dropped. We're not going to curtail production enough just from price alone and incentivizing use. We need to see some sort of supply cut to get things excited again, to get prices, in our opinion, high enough to get back to a decent return for the U.S. grower. It would be very beneficial to see that happen right now when the funds are at record short for corn. So we're going to be watching that closely. Obviously, if something does spur, 10, 20 million metric ton reduction, I mean, that would be an awesome thing for price action right now. We just have to continue to watch that and see if anything comes up.
Yeah, absolutely. Crop insurance, by all estimations, it's going to be really difficult to move the needle, right, in the next 6 days with a little over 70% priced. What's your thoughts on how that ratio is coming to fruition? And I know you've touched on it a couple of times, but now that we're really getting into the finish line here.
Yeah, high beans to corn ratio, low flat price, below cost production. Last year, we saw a lot of people able to, insure themselves above their cost of production at an 85% policy, just because
by quite a bit, right?
Yeah, absolutely. So let's just say you're taking an 85% policy last year and you're a 200 APH grower. Your guarantee, if we stay at today's price through the next 6 days, is going to be about $215 an acre cheaper or less than your guarantee was last year. If we're looking at only a $60 to $70 an acre cut on cost production for that type of APH, right? That's not very much for a $215 less of a guarantee. So we're just talking about something with a deductible. So immediately without the deductible, right away, that revenue is down quite a bit. We think that could very easily lead to less corn acres, just from a guarantee standpoint going into loan renewal season. We saw this on the USDA Feb Outlook. They did lower the corn numbers from early estimates by quite a bit. And, seeing a more even split of 89 million acres of each, I think a lot of people would say that's way too low for corn acre number. I guess we wouldn't be surprised to see that in the end, given the price action we've had. So we'll have to see for March 29th, but definitely erring on the lower side. These 93 million corn acreage estimates, I think, are way too high. I would say sub 91 million seems more likely.
I'll add to that too, because I think sometimes logic doesn't coincide with reality. And I think logically it makes sense for us to lose corn acres, but I think right now too, which is maybe even more important, is just the psychology of the market, right? I think you've convinced a lot of people that the corn market is over, right? It's dead in the water. It's not going anywhere. It's not going anywhere this year. It's not going to go anywhere next year. So you throw in the towel. So if you've convinced enough growers that that's the case that they're going into, right? Not only they're like, well, why would I even put it in the ground, right? Why would I even spend money on crop insurance and inputs and all these other things if there's no chance of a rally, right? And it doesn't take much of a change to lose a whole bunch of acres. So I think those two things combined could be a big switch. So
that's a great point, Jace. And then there's the side that'll plant it because they want to catch all the other guys that don't plant it, right?
Yeah. Well, no one's planting it. I better plant it. Yeah.
What a game we're in.
Yeah.
Cotton prices have been good too, so I don't think we're gonna see a reduction in cotton acres by any means. We would have to see how weather goes with the northern plains, but that that could make or break a lot of the corn acreage number, as well as any prevent plant we might see in North Dakota this year. When you see a lack of a price incentive, weather's not conducive, they're not going to go mud it in, right, at a $4.50 corn price. They might at a $6 corn price.
Sure. End row to end row in that type of environment. We've seen that. I'll have to fact check this too, Dustin, but they came out with some cotton acres a couple days ago, and I think we're just short of 10 million, which I think was above what they were looking for. So I think that there you are seeing kind of some of the Delta crew, when they're looking at rotational stuff. If they have the ability to plant cotton, I think they're looking to go maybe plant some more cotton, from just anecdotally from some of the things we've heard. So
yeah, price incentive is definitely better.
Sure. Ryland, coming into the open here this morning real quick. I know we looked at, we had cattle on feed estimates out yesterday. We're going to have that report tomorrow. Still not a lot shaken out in the cash markets, maybe just a little lower cash trade from some of the things I'm hearing. What do you got?
Yeah, I mean, the focus is really going to be on the report tomorrow, and just overall, it really hasn't seen too much cash trade whatsoever. I mean, we continuously make new highs in the feeders and on the live side in price. So that really hasn't stopped, and we're keeping this nice premium on the board. There are no deliveries against the Feb right now, but we're coming into Feb expiration here pretty soon. So most of the money is going to be moving to April and on back. Just overall, there's kind of a wide discrepancy in placement expectations for the report tomorrow, but the general consensus that we're going to see about a 12% decline. A lot of that was really because of the weather in January. We saw just massive transportation issues. We saw auction volumes really drop off. So that was really a concern. And I think that there's a lot of guesswork that goes into that placement number right now. And, we haven't, I imagine that weather issues also kind of ate into a lot of the potential imports that we would have seen from Canada or Mexico. So it just doesn't feel like we're really going to see a big number on this report, which would technically probably be a little bit on the bearish side, but still want to be cautious. The price action, even though we're kind of grinding to new highs every day, we're coming onto some pretty interesting places on the chart here. The gap on the April live cattle is right at 190.27. So I mean, everybody's kind of shooting for that, and have been for the past month and a half. So it seems like that's going to be one of those big psychological levels to take out on this upside. But we just need to see a little bit more follow through on the longer term side in cash, and see these packers really continue to support the market and probably keep kills back. So it's just, we're in that situation right now. So we'll see what happens. I would say the trade's going to lean a little bit cautious here with such a low placement number on the estimates right now.
Well, very good. And we'll have more of our opinion after that report. Certainly we'll talk about it Monday, and I know you'll do a write-up there on Friday.
Sure.
That'll be out at 2 Central tomorrow. Cattle on feed. So just came into the open here. We got March corn up 3 at 414. March soybeans down 3.5, 1157.5. Strongest day on the board, Chicago wheat. It's up 14, 597.25, just off the high. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate the conversation here this morning, guys. Good visit. Look forward to talking to everybody tomorrow. Hope you guys have a great day.
Thanks, Ben.